At 16 years old, most kids are worried about passing their driving test or figuring out who to ask to prom. But while his classmates were cramming for algebra exams, Jonathan Lebed was making $40,000 a day from his bedroom computer. By the time the Securities and Exchange Commission knocked on his door, he had manipulated stock prices, orchestrated elaborate pump and dump schemes, and walked away with nearly $800,000 in profits. The craziest part? He was just a kid from New Jersey who taught himself how to game the system. This is the story of the first miner ever charged with securities fraud by the SEC, and somehow he managed to keep most of his money. What Jonathan pulled off shouldn't have been possible. Wall Street is supposed to be protected by layers of regulation, sophisticated monitoring systems, and teams of experts whose entire job is to catch this exact type of fraud. Yet a teenager with a dial-up internet connection ran circles around them all. But here's what makes this story even more fascinating. Jonathan didn't just get lucky once. He executed his scheme over 200 times across 11 months, each operation more brazen than the last. He'd wake up before school, spend hours crafting fake personas online, pump up worthless stocks with fabricated hype, then cash out before anyone realized what happened. By the time investigators started connecting the dots, Jonathan had already moved on to his next target. The techniques he used were so effective that professional traders on Wall Street started copying his methods. Investment firms began studying his strategies, and when the dust settled, even the SEC admitted how did Jonathan Lebed become the most? Why did he get to keep most of his illegals? They learned something from investigating a kid who wasn't even old enough to vote. So successful teenage stock manipulator in history, and profits when grown adults go to prison for far less. Cedar Grove, New Jersey, 1999. Jonathan Lebed looks like any other high school sophomore. He's quiet, keeps to himself, spends most of his free time in his bedroom. His parents think he's just really into computers, which isn't unusual for kids his age. What they don't realize is that their son has discovered something that will change his life forever. While browsing investment forums late one night, Jonathan stumbles across a simple but powerful realization. Stock prices don't always reflect a company's actual value. Sometimes they move based purely on emotion, hype, and fear. Most people would file this observation away as interesting trivia. Jonathan sees an opportunity. He starts small, watching how certain stocks behave when people post about them online. He notices patterns. When someone writes enthusiastically about a company, even if that company is basically worthless, the stock price often jumps. When multiple people start talking about the same stock, the effect multiplies. Jonathan realizes he's looking at a machine he can manipulate. His first experiment is almost innocent. He buys a few $100s worth of shares in a struggling company, then goes online and posts genuinely optimistic messages about their prospects. Nothing false, just highlighting the positive aspects while ignoring the negatives. Within hours, the stock price rises. Jonathan sells and makes a small profit. It works exactly like he predicted. Most teenagers would be thrilled with making $50 or $100 and call it a day. Jonathan sees this as proof of concept for something much bigger. Over the next few months, he refines his approach. He studies which types of messages get the most attention, which forums have the most influence over stock prices, and how long it typically takes for his posts to move the market. He's treating stock manipulation like a science experiment, carefully documenting what works and what doesn't. His parents have no idea their son is conducting graduate-level research in financial fraud from his bedroom. Jonathan's breakthrough comes when he realizes that one enthusiastic post isn't enough to create serious price movement. But what if that post came from multiple people? What if those people all seem to have different backgrounds and investment philosophies, but somehow all reach the same conclusion about this amazing stock opportunity? Jonathan begins creating fake identities online. Not just different usernames, but entirely fabricated personas with unique writing styles, investment histories, and personalities. There's the experienced day trader who's been working the markets for 20 years, the cautious retiree who only invests in sure things, the hotshot analyst who has inside information about upcoming developments, the technical expert who's identified a perfect chart pattern. All of them are Jonathan, posting from his bedroom computer, but to anyone reading the messages, they look like independent confirmation from multiple sources that this particular stock is about to explode. The psychology behind this is brilliant. When people see one person recommending a stock, they're skeptical. When they see 5 different people with different backgrounds all reaching the same conclusion independently, it feels like validation. It triggers what psychologists call social proof. If all these smart, experienced investors are buying, maybe there's something here. Maybe I should buy too before I miss out. Jonathan's system becomes increasingly sophisticated. He doesn't just create fake personalities, he develops their entire online histories. He'll spend weeks establishing credibility for each identity, posting thoughtful analysis about various stocks, engaging in discussions, building reputations as knowledgeable investors. Then, when it's time to execute a scheme, these trusted voices all start talking about the same target company. But Jonathan's real genius lies in his timing and target selection. He doesn't go after big, well-known companies where his activities might attract attention. Instead, he focuses on small, obscure stocks that barely anyone is watching. Companies so tiny that even a few $1,000s in trading volume can dramatically impact their share price. These are the perfect targets because they're volatile enough to move quickly, but insignificant enough that major institutions aren't paying attention. The typical Jonathan Lebed operation follows the same pattern. First, he researches potential target companies, looking for businesses that are technically legitimate but struggling, overlooked, or undervalued. Then he quietly accumulates shares, usually spending between $10,000 and $15,000 of his profits from previous schemes. Once he owns a significant position, the propaganda campaign begins. His fake personas spring into action across multiple investment forums simultaneously. The veteran trader posts detailed technical analysis showing why this stock is poised for a breakout. The cautious retiree mentions how he's been quietly accumulating shares for months. The insider hints at upcoming news that could send the price soaring. Each message is carefully crafted to sound authentic, with different writing styles and investment philosophies that make it impossible to tell they're all coming from the same teenager. Jonathan has learned that successful manipulation isn't about making wild claims. It's about planting seeds of doubt and greed in exactly the right proportions. His messages never promise guaranteed returns or claim insider knowledge directly. Instead, they pose questions that lead readers to draw their own conclusions. Has anyone else noticed the unusual trading volume in this stock lately? Or, I'm wondering if the recent management changes at this company might signal something bigger coming. So, the beauty of this approach is psychological. When people feel like they've discovered an opportunity themselves, they're much more likely to act on it than if someone simply tells them what to buy. Jonathan's fake personas guide readers toward the conclusion he wants them to reach, but they make it feel like their own brilliant insight. It's manipulation disguised as helpful discussion. Within 24 to 48 hours of launching his propaganda campaign, the target stock begins to move. Small investors who frequent these forums start buying based on the seemingly independent recommendations from multiple trusted sources. As the price rises, it attracts attention from day traders and automated trading systems that are programmed to spot unusual momentum. The initial wave of buying creates more buying, and the stock price accelerates upward. This is where Jonathan's timing becomes critical. He knows that the price movement he's created is artificial and temporary. There's no real business development driving the increase, just manufactured hype. Eventually, reality will reassert itself, and the stock will crash back down. His window to sell is narrow, usually just a few hours, or at most a day or two. Jonathan has developed an almost supernatural ability to sense when his artificial bubble is about to burst. He monitors trading volume, watches for signs that institutional investors are getting suspicious, and tracks how long the momentum can sustain itself. When his instincts tell him the peak is approaching, he begins selling his shares in small batches to avoid triggering any automated alerts that might flag unusual trading activity. By the time other investors realize they've been played, Jonathan has already cashed out with profits ranging from $30,000 to $60,000 per operation. The stock price collapses, leaving behind a trail of confused and angry investors who can't figure out what happened. Meanwhile, Jonathan is already researching his next target, completely invisible to anyone trying to trace the manipulation back to its source. What makes Jonathan's scheme so effective isn't just the technical execution, it's the psychological profile of his victims. He's not targeting sophisticated institutional investors who have teams of analysts and risk management systems. He's going after individual retail investors who are looking for the next big opportunity, people who want to believe they can find hidden gems that the professionals have missed. These investors are already primed to act on tips and recommendations they find online. They're actively seeking information that will give them an edge, which makes them perfect targets for Jonathan's elaborate deception. When they see multiple credible sources all pointing toward the same opportunity, it feels like confirmation of their own intelligence and research skills rather than manipulation. The scale of Jonathan's operation grows exponentially as his confidence increases. What started as small experiments with a few $100s evolves into a sophisticated financial fraud, generating tens of thousands in profits per week. He's developed systems for managing multiple fake identities, tracking which personas are most effective in different forums, and rotating his targets to avoid establishing any patterns that might attract regulatory attention. But perhaps most remarkably, Jonathan is doing all of this while maintaining his cover as a regular high school student. He wakes up early to execute trades before school, spends lunch periods managing his fake online personas, and stays up late researching new target companies. His parents think he's just really dedicated to his computer hobby. His teachers see a quiet but bright student who pays attention in class. None of them have any idea they're looking at one of the most successful stock manipulators in the country. The money keeps pouring in. $40,000 on a good day, sometimes more. Jonathan's bedroom computer has become a profit-generating machine that would make professional traders jealous. He's accumulated hundreds of thousands of dollars, all while avoiding detection by some of the most sophisticated financial monitoring systems in the world. But success breeds ambition, and ambition creates risk. Each successful operation makes Jonathan bolder, more confident that he's found a foolproof system. He starts taking bigger positions, targeting slightly larger companies, posting more aggressive promotional messages. The profits are intoxicating, and like many successful criminals, Jonathan begins to believe he's untouchable. What he doesn't realize is that patterns are emerging in the data, and somewhere in a government office building, investigators are starting to notice unusual correlations between online promotional campaigns and suspicious trading activity. The net is closing, slowly but inevitably. Jonathan Lebed's story forces us to confront uncomfortable truths about our financial system. A teenager with no formal training, no inside connections, and no sophisticated technology managed to expose fundamental weaknesses in the very foundations of Wall Street. His success wasn't just about exploiting regulatory gaps or technical loopholes. It revealed something much more troubling about human psychology and how easily crowds can be manipulated when greed and fear take control. The most unsettling part isn't that Jonathan got away with it. It's that his methods were so simple, so replicable, that they've become the blueprint for countless schemes since then. Social media manipulation, fake personas, manufactured hype campaigns, all of these tactics that seem cutting edge today were pioneered by a 16-year-old kid in New Jersey over 2 decades ago. When the SEC finally caught up with him, they faced an impossible situation. How do you prosecute a minor for doing what thousands of adults do every day on Wall Street, just more effectively? How do you explain that professional traders were studying his techniques while simultaneously calling him a criminal? The settlement they reached, allowing Jonathan to keep most of his profits, wasn't just about his age. It was an admission that the system itself was broken. Today, Jonathan Lebed runs a legitimate investment website, still analyzing stocks, still making predictions about market movements. He never went to prison, never paid massive fines, never saw his life destroyed like so many other financial criminals. Sometimes the smartest move isn't following the rules. Sometimes it's being too young to face the consequences when you break them.